Money does not grow on trees and neither grows in our bank account. While your money can grow with interests, in reality it does not grow in value because of inflation. The super slow money growth in the bank cannot keep up with inflation. Keeping cash in the bank or at home is not beneficial for your financial growth. In today's video, we will talk about 7 assets that are better and safer than cash in the bank. So let's get started. Welcome to Luxkey. Mindset. One of the best assets you can have and that no one talks about is your mindset. Our mindset refers to our attitudes, beliefs and perspectives that shape how we perceive and respond to the world around us. It plays a significant role in determining our success, happiness and general well-being. With a positive mindset, you will see opportunities where others see obstacles. You will face setbacks and challenges with optimism and resilience. You will see failure as temporary and learn from it. With the right mindset, you will grow and learn from failure. When you are down, the only way is up. With an adaptable mindset, you will embrace new ideas as opportunities. You will adapt, which is crucial for your success. You will be more confident and believe in your abilities in an optimal mindset. If you believe in yourself, the fear of failure does not exist and you will put all your energy into progressing with your goals, grabbing opportunities and achieving your full potential. You will be more motivated to take actions and use one or more assets that we'll discuss in this video that are better than cash. This is why you can consider your mindset as your main asset. Real estate. Real estate can be considered a better asset than cash because it has the potential to grow in value. Cash tends to lose its value over time. Real estate is often seen as an edge against inflation. When inflation happens, the value of cash drops, but real estate prices tend to increase along with the general price level. Individuals can protect their wealth from inflation by investing in real estate and preserving purchasing power. Real estate is an asset that is really good for generating cash flow and passive income. Rental properties allow investors to earn a consistent cash flow that would not happen if they had the money in the bank or at home. Holding real estate assets diversify an investment portfolio. It provides a different asset class that may not link directly with other investments like stocks or bonds. This diversification can help reduce general portfolio risk and boost stability. Real estate is a tangible asset. Unlike cash, which is subject to inflation, economic instabilities, or potential currency depreciation, real estate investments have a history of long-term stability. This stability can provide a feeling of security and a long-term investment horizon. Art and collectibles. Art and collectibles have the potential for significant appreciation in value over time. Rarity, historical significance, the artist's reputation, and demand among collectors can all contribute to price appreciation. Some artworks and collectibles items have achieved staggering returns on investment. A good example is the Andy Warhol 4 Marilyns. Warhol painted 4 Marilyns in 1962 as a tribute to Marilyn Monroe's untimely death that same year. The work was first publicly sold at Sotheby's in London in 1992 for approximately $955,000. The painting was sold at a Christie's auction in 2015 for $36 million. Art and collectibles offer the unique advantage of being tangible assets. Unlike stocks or bonds, they can be enjoyed aesthetically and provide a feeling of ownership and pride. Collectors frequently have personal satisfaction and cultural enrichment from possessing artworks and rare collectibles. Including art and collectibles in an investment portfolio can diversify risk. These assets often have a low connection with conventional financial markets such as stocks and bonds. Therefore, they can act as a wall against market volatility. Artworks and collectibles often represent a cultural and historical value. Owning such items allows individuals to preserve and appreciate important pieces of history, artistry, and human creativity. Many artworks and collectibles are one of a kind or produced in limited quantities. The rarity and exclusivity of these items can contribute to their value. As demand outweighs supply, the prices of such items can rise significantly. That is why art and collectibles are assets better than cash. Investing in the art and collectible assets require a certain level of expertise and research. Gold and precious metal. Gold and precious metals have been highly valued through history of their inherent beauty, rarity, rarity and utility. Civilizations have treasured gold for thousands of years, dating back to ancient times. It has been used as currency, a symbol of wealth and power, and an artistic medium. Precious metals, including gold, silver, platinum, and palladium, have played essential roles in various cultural, economic, and religious contexts. Gold and certain precious metals are often regarded as a safe haven assets during economic and geopolitical instability. They tend to keep or increase their value when other financial markets experience volatility. Investors may turn on these metals to protect their investments during turbulent periods. Including gold and precious metals in an investment portfolio can help diversify risks. Precious metals have historically a poor link with traditional financial assets like stocks and bonds. Adding these metals to a portfolio can potentially enhance overall returns and reduce the impact of market fluctuations. Gold in particular is highly desired for its aesthetic appeal in jewelry and decorative items. The enduring popularity of gold jewelry makes it a significant driver of demand for this precious metal. Other precious metals like silver and platinum also have substantial roles in the jewelry industry. Gold and precious metals continue to delight the imagination and play essential roles in various aspects of our lives, ranging from investments and finance to art, technology, and personal decoration. The charm of these metals is likely to endure, making them an integral part of human history and economic systems. Personal growth. Personal growth is an asset better than cash because it focuses on developing oneself intellectually, emotionally, and spiritually. It involves acquiring new knowledge, skills, and perspectives, which can lead to tremendous personal fulfillment and satisfaction in life. While cash can provide temporary satisfaction through material possessions or experiences, personal growth offers lasting and meaningful benefits. Personal growth involves constant learning and skill development. Individuals become more adaptable and capable of tackling various challenges. This can enhance career prospects, increase earning potential, and open doors to new opportunities that may not rely solely on cash. Personal growth helps individuals discover their passions, values, and purpose in life. It involves aligning actions with personal values and finding meaning in what one does. A sense of purpose provides a deeper sense of fulfillment and motivation, exceeding the temporary pleasure that cash can provide. While cash can be lost or devalued, personal growth and the skills acquired through the process remains with you regardless of your financial situation. The personal and intellectual growth earned can help you rebuild and recover from financial setbacks, making you less reliant on monetary resources alone. Bonds. Bonds are often considered better assets than cash because they provide a fixed income stream through regular interest payments. Unlike cash, which typically earns minimal or no interest, bonds can generate consistent income over a specific period. This income can be precious for individuals seeking stable cash flows or those who depend on investments income for their financial needs. Bonds, especially high-quality government or investment-grade corporate bonds, are considered less risky than many other investments. They offer a fixed income stream and have a predetermined maturity date, reducing the uncertainty associated with different types of investments. This lower risk profile can appeal to investors pursuing a more traditional approach or capital protection. It is important to note that different types of bonds carry varying degrees of risks, and investors should carefully access their risk tolerance, investment goals, and time horizon before investing in bonds. Index funds. Index funds are frequently considered better than cash because they provide instant diversification across a wide range of stocks or bonds. Instead of holding cash, which has no potential for growth, index funds allow investors to participate in the performance of a broad variety of securities. By owning a diversified portfolio, investors can lower risk and potentially capture broader market returns. Index funds typically have lower expense ratios compared to actively managed funds. These funds aims to replicate the performance of a specific market index, such as the S&P 500 or the FTSE All-World Index, rather than relying on active stock picking or market timing. As a result, index funds generally have lower management fees and trading costs, allowing investors to keep a higher portion of their investment returns. Index funds are generally considered lower risk compared to individual stocks or actively managed funds. By diversifying across a wide range of securities, index funds spread the risk associated with any single company or sector. In conclusion, relying solely on cash may not be the best approach for financial growth and security. While cash is important for day-to-day transactions and immediate needs, there are several assets that can offer better opportunities for long-term growth and protection against inflation. While cash is essential for liquidity, embracing these assets can enhance financial growth, protect against inflation, and provide opportunities for wealth accumulation. By diversifying our assets and adopting a growth mindset, we can set ourselves on the path of long-term success and financial well-being. If you like this video, please like and subscribe. Remember, you have the ability to shape your own destiny. Believe in yourself, keep striving for excellence, and never stop learning. Thank you for watching, and I'll see you in the next video.